Welcome to the Stay Ready Real Estate Podcast, where we stay ready so you don't have to get ready. My name is Emeka, and I'll be interviewing a variety of non-professionals in the real estate industry to help you get 1% closer to your goal of buying your next real estate investment. My goal with this podcast is to show the world that people like you and me can buy real estate to build wealth. Today we have Dr. Alex Tam. He is a chiropractor specialist, real estate investor, entrepreneur, husband, and a proud father. He graduated with honors from the University of California, Davis with a degree in exercise biology and then attended Life West Chiropractic College. He founded and is the clinical director of Absolute Integrative Physical Medicine, a state-of-the-art facility treating a wide range of medical conditions. He discovered real estate investing along with the powerful tax benefits available through owning real estate investments and has achieved financial freedom. He also created a business around virtual assistants to help others leverage their time in best possible way to grow their business. Dr. Tam hosts a podcast to discuss how other professionals balance success and lifestyle. Dr. Tam resides with his family in California and is a dedicated husband and proud father to his beautiful daughter. Let's listen to Alex. So Alex, can you tell the audience a little bit about who you are and what you do?
Yeah. Hey, Emeka, thank you so much for having me on. So for the last 15 years, I've been a clinic director and a chiropractor at a medically integrated practice. And about 7 years ago now, it's hard to believe it's been 7 years, got into real estate, started investing as a limited partner, right? And from there, a few years of that, got into a educational platform called Jake and Gino, joined the MIH Mastermind, and has been investing as an active partner in JVs, as a general partner, and has played different roles in the real estate space. And then it's been a great journey. So thank you for having me though. Yeah. So what initially brought me the interest in the real estate is I was at a conference, the 10X Growth Conference from Grant Cardone. And from there, he started talking about real estate, right? So I dove into it, started doing limited partnerships, syndications. And the reason why I went into Jake and Gino and started deciding to do it actively was really because we wanted to play a more active role. We had friends that were asking us about how to invest, what to invest in. And I didn't feel educated enough to tell them, hey, this is what I would do if I was in your shoes. So I really feel like in order for us to excel in this world, to get all the benefits, to educate ourselves in the long run, right? And to meet other investors, because there's always smarter people out there than us, and especially the ones who are doing it full time, right? And that's why I joined Jake and Gino and met some great partnerships, great people. And even from that started, besides other real estate business, started a virtual assistant agency as well.
Raising money and getting people's attention is not easy. It's not just, posting a couple times a day, because it takes time to post. It takes time to edit. It takes time to get the right fit and fit your brand. So can you talk a little bit more about how you're able to be all over social media while you're also a doctor, while you're also a family man and a dad?
Right. So being on social media is something that I realized it was necessary for me. In 2016, we had a virtual assistant that really did a lot of the video editing. But before that, I was doing it on my own, right? And in business, they talk about being omnipresent, which means being on different platforms, making sure that your face shows up, that you are relevant, that you talk about relevant topics. And that's where that stems from, right? And then a lot of it is from business to real estate. At the end of the day, we're doing it for our family to make sure that we have experiences that we really want to have, right? As a husband, as a father, those things are really, really important to me, making sure that I fulfill my role in those roles. And real estate has really helped me do that.
I know you focus on multifamily. So how did you get into your first deal?
Yeah, so the partners that we have, almost every partnership that we have is either from Jake and Gino or the MIH Mastermind, right? I can't say enough great things about a mastermind, because a mastermind is where you realize everyone in that mastermind are learning the same things, have the same foundation, you're after the same goals. And the know, like, and trust and verify is so important because you have to, you get, when you get into a deal, you're getting into a deal with people that you're going to be talking with for years to come. So you got to make sure you actually like talking to them, enjoy talking to them, and in the long run can work with them as well. How we got into our first deal was kind of it's, I say it's due to perseverance, if you will. Someone posted a link or a message on the mastermind saying they had a deal. And it just so happens that I spoke to this couple 3 weeks before they did a post. And they didn't live too far away from me in California. And I said, everyone on the message board says, hey, shoot me the deal, shoot me a message, shoot me a deal, DM me, da 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 da. I just straight up called them. And I said, you know what? Let me just give you a call. I said, do you have time for a call? And they said, yeah, give me a call right away. Boom. We got on a call within 20 minutes. I said, okay, I knew what the deal was. I knew the background of the deal. I said, send it to me. I'll look over it tonight. I'll give you an answer by tomorrow. And that's how we ended up getting into the first deal.
How big was the deal?
That deal was a 56 unit deal. And that was our first position in playing a role in the GP.
What was your role as a GP?
Ultimately, there were asset management roles. We helped out with marketing, some capital raising on top of that. So that was our role because, in multifamily, looking at where you stand and where your role is important. It really depends on where your strong points are, right? Or what you're willing to learn. For me, with my background, is talking to people and doing, recommending care plans in terms of a doctor, telling people what's the best way to treat their body. That's just second nature to me. And when I started looking at the different roles in real estate, I said, okay, wow, investor relations is probably something that I can play, right? It's people who want to invest, telling them about what the deal is like, helping out with some asset management, doing marketing. That's where I'm strong at in another field, and that translates directly into multifamily.
As mentioned earlier, we spoke this morning about taxes. So in this episode, I really kind of want to dig more into the details and just why real estate is so cool and so important to invest in. So you mentioned that you spent $87,000 in taxes that you could have avoided.
Yeah, that was how much I paid that I didn't know I overpaid in, right? So that rolled into the following year, which was great because there are two ways that the government benefits us as investors in terms of tax breaks. You've got commodities, usually in the oil and gas, and then you got real estate and different types of real estate. And the reason is because the government believes that if we are providing housing for people to live, right, they can subsidize it, which means they don't have to do that, right? And the government's, they're not the best ones at providing housing. So they want other people to take this over, and you get tax benefits. Yeah, like you said, there is the depreciation, right? Usually when you buy a rental home, it's depreciated over 27 and a half years. But then there is bonus depreciation if you do a cost segregation study, where you can have a majority of that depreciation in between year 1 to 5. So that is something that I will recommend everyone to look into if they are doing a real estate investment, is to make sure that that investment is getting cost segregation studies done, and where you can achieve the bonus depreciation, which, if you have real estate professional status, can offset your earned income against, your passive income losses, and depreciation offsets against your earned income, which is huge. One of the examples that we gave this morning was, imagine if you invested $100,000 and your cost segregation study was able to give you 60%, and you were able to depreciate the whole thing in year 1. Well, if you offset 60%, of your income and you were getting taxed at a 40% tax bracket, automatically you just saved $24,000. And that's huge. That's huge. So before you even get any cash flow, before we talk about any cash flow, any appreciation of the property, before any of the mortgage pay down, right? You're already in the green from the get-go. And that's what is so exciting for me. And I hope that a lot of people who are investors gets to see that there is a different side of things versus investing in stocks or putting it in like a bank account, right? You just can't beat it. Some people will be like, oh, well, when I put it in the bank account, I get 5%. Well, yeah, but that 5% gets taxed and you're really getting only about 3%.
That's amazing. And for those people who are listening right now, we are not accountants. This is strictly educational. So don't just take our word for it. Even though I believe the word is good, definitely talk to your accountant because they know these
Absolutely.
things. It's in the tax laws. How are you able to find out about this tax information?
Right. So that's where a good real estate CPA attorney comes in, right? You got to have a good team that's able to understand the laws and how you play the game, because those are the rules of the game. We didn't make up those rules. The government, the IRS made up those rules. So the rules are there. Find people in your life who are smarter than you in that game. And when you can find people that are smarter than you, then ultimately, and you know how to play the rules of the game, you know what the rules are saying. Now you can use the rules to your benefit and to really figure out if it's a good deal, is it a good play, or is it not?
What advice would you give that new aspiring investor to get started and to get their feet wet in the game of real estate?
Oh, that's a great question. I mean, the two attributes that we can give in this world is money and time, right? And for a lot of new investors who may have more time than money, partner with others who have more money than time and figure out what they need to where do you fit where you can benefit them the most so that they can really almost like buy your time, right? And someone brings the capital, someone brings the time. And because you need both, right? You can't just have money without time and sweat equity. And you can't have sweat equity without the money. So when you're first starting off, find people and partner with people who have the finances, the capital, and so that you can put in the time for it. And that's how you grow a business.
What do I
Well,
need to do, or where do I need to start to find the correct property?
that's a great question because in order for you to start looking at deals, you have to look at, okay, what type of deals are you really going for, right? But ultimately, you got to look at what deals are you trying to look for. Not only the market, but the type of deal that you are planning to take down as well. For example, okay, people ask me, well, even I've asked the question before, like, how do I know what deal I should be taking down? I love 100 units. I say, okay, you love 100 units. Let's take a look at who your partners are, right? Because you got to talk to people to figure out who your partners are. Because your biggest partner in this game is the bank, okay? It's not just you and 3, 4 other partners, it's the bank. The bank has rules. The bank rule says between you and your partners, these are the general partners, okay? All of you combined has to have a net worth that is equal or higher than the loan. Some banks say it has to be equal or higher than the property's value itself. So, for example, if you and 5 other partner, everybody has, let's just say, $1 million net worth, not counting your primary residence. All right. So, at a $5 million net worth, that is probably the biggest loan you can get. Okay. Now, if at $5 million loan is the biggest loan you can get, and you're getting it at, say, 70%, you're really looking at about a 7 million, $7.5 million property, right? So that's how you know that's the biggest that you can take down. But on top of that, you have to make sure that the liquidity after the down payment's paid, the bank might also look at how many months of mortgage do you guys have in the bank after you pay the initial down payment. They might want 12 months, they might want 18 months. Now, based on the financial capability of the team, now you know what size of a deal, what type of deals you guys can take down. And now you start looking at whether it's MLS, whether it's Crexy, maybe you're looking at CoStar, you're talking to brokers, you're talking to property management, you're talking with boots on the ground, other team members, right? And you figure out, okay, what's the best way? Maybe sometimes people do cold calls, right? Find out the best way to get the leads in and figure out who's trying to sell at a good price and then start negotiating. But until you figure out what size you guys are able to take down, this is what I learned from one of the coaches. And that's why it's so important to have coaches and be part of a mastermind, is you wouldn't know what size you guys can take down unless you figure out what's everyone's financial status, your personal financial statement. So that's your PFS. Everyone should have that.
All right, Alex,
Yeah.
can you tell us a little bit about your portfolio?
Yeah. So from the 56 unit, right afterwards, we have a 96 unit in the same local area as well. Different JVs, also from 27 to 18, 12 units. Another GP at 36 units. So overall, we have between 200 to 250 units that we are actively investing in. So that's, and they're all over, right? From being in the Midwest to the Southeast. And those are the areas that we really like. We call it more owner friendly states, instead of being two tenant friendly. So those are the places we try to remove as much obstacles as possible when we're investing. And that's really a key thing for us.
What's your goal with real estate?
That's a great question as well. Initially, when we first got into real estate, someone told us that the meaning of financial independence, which is where everything outside of your W-2 that you can get passively can replace your expenses, right? Can cover your expenses. And if your investments and passive income can cover your expenses, that's when you become financially independent, right? And achieving that was the number one goal. And thankfully, after years of investing, we were able to achieve that, which is great. And now the goal is I want to continue making a bigger impact in people's health on top of real estate. So as we do better in our company and we're looking into opening multiple practices and medical practices, we also are looking at investing that into real estate to continue grow our nest egg and provide a better life for our family as time goes on as well. Some people ask me, do I ever want to transition into full-time real estate? And I thought about that before, but I also thought about how what we've built in the medical field is just way too good to not continue to share that with the rest of the world. So we're going to continue building both. Why not build both?
Why not build both? And I didn't prep you for this question, but if you can give the audience your top 5 reasons that they should get into real estate right now, what would they be and why?
You got to look at real estate as an investment, right? It's a phenomenal investment, right? One of the best that I know. I'll say that's number one. It has the ability to give you financial independence and financial freedom that can truly, ultimately, in the long run, be passive, if you like, right? That's number two. It's a great way to build relationships with people. I'm all about relationships. And the people that I have met, like yourself, Rebecca, in real estate, is some of the greatest people ever, right? Great values, great people, and I believe people in real estate are forward thinkers. Some of the most creative folks that I've ever met. So relationships are really, really important. And of course, financially, it's phenomenal as well. And gosh, I'll say the fifth reason to get into real estate is just, even if you love your W-2 and what you do, it's a phenomenal side project. Some people build Legos, right? It's kind of like real estate. Why not just build a real one?
I love it. I love it. And that's going to segue into our last segment of the show where I ask everyone the same 3 questions. Number 1, what are the 2 books you recommend an aspiring investor to read?
I'll say the first book is there's a book called The Hands-Off Investor by Brian Burke, right? To really look at what real estate investing is, you got to look at both sides. You got to look at the passive side, right? And there is that book. Then there's the active side, which is Joe Fairless's book, the best ever real estate investing book, right? And you got to look at both sides. Do you want to play the active role? Do you want to play the passive role as well? Those are going to be my 2 books.
What was the most impactful speech or lesson that helped you in your career?
In my career as a whole, I'll say one of the most impactful speeches was at a 10X conference where the speakers talked about you got to pay the price today in order for you to pay any price tomorrow. And there's no shortage. You might have things that you can do that can accelerate success, but there's really no shortcuts, right? And that's one of the quotes that I really love. Pay the price today so you can pay any price tomorrow.
Amazing. And if you could have dinner with anyone, dead or alive, who would it be and why?
Dead or alive, it'll be Tom Brady. Because his perseverance, him as a person, and what he has done in his dedication, right, has just been phenomenal. So that's who I'll pick.
How can the audience reach you? If they want to learn more about you, reach out to you, and maybe even learn more about your medical practice, where can they go?
Yeah. So our practice is Absolute Integrative Physical Medicine. That's in Vacaville, California. Multiple locations are coming. For me, you can find me on LinkedIn. You just type in Alex Tam. Facebook, the same way. Messenger, right? Those are some of the easiest ways to find me. And hopefully we get in touch and chop it up on some more real estate.
Amazing. Well, Alex, thank you so much. The audience is going to love it. And I hope to have you back soon.
Yeah, thank you so much for having me, Becca.
That was Alex, everybody. At the beginning of the podcast, I told you I'll give you 3 actionable steps to help you get 1% closer to your goal of buying your next real estate investment. Before that, please like and subscribe if you enjoyed the podcast. It means the world to me and it will help me make this thing better. Step 1. Talk to an accountant and ask them how real estate investing can help offset your W-2 income. Being a W-2 worker means that you are going to be taxed the highest. So ask your accountant just how buying real estate investment can help. Number 2. Go on mihmastermind.com to browse the website, schedule a call with someone, or look at some of the courses that they offer. Real estate is all about education, so you must continue to learn. So educate. Saying on the tax subject on step 3, look into a 1031 exchange. Some people never pay taxes because they continue to do 1031s. What it is basically you sell one property, let's say a single family home, that's a 2-bed, 1-bath, to buy a 3-bed, 2-bath. Since you are trying to buy a bigger investment, you can technically avoid capital gains tax and just roll that money over into the next property. I am not an accountant, so definitely talk to an accountant about that, but there's specific 1031 intermediaries. Look into it and find a way for you never to have to pay taxes on your real estate again. See you next time.